But it is time to address the elephant in the room, which is these higher interest rates. And I'm sure you've watched the news, and I'm sure you've heard everything from about a market crashing to foreclosures to all different types of things. Now, every market is different, so we're going to be talking about the Northeast Florida market and some tips and tricks on how to navigate these higher interest rates and what you can expect. So you want to be sure that you stay tuned to the very end. You would have to have your head in the sand not to have heard a little bit about what's going on in our economy with inflation and interest rates on the rise. So we're going to unpack just what's going on in our market, what we're seeing here in Northeast Florida as far as housing and what you can expect. But before we dive into it, let me introduce myself. My name is Kashira Francis, aka Francis. I am a licensed real estate professional, licensed throughout the state of Florida, but specializing in the areas of both Northeast Florida as well as Central Florida. Now, on this channel, we cover everything you need to know about the Florida lifestyle, whether you want to buy a home, sell your home, whether you want to build from the ground up, whether you're looking for a vacation rental, whether you just need to know great schools, great beaches, we cover it all. So let's dive into it. So as you know, interest rates are just as high as they were back in 2008. So how is this market different from the one we experienced in 2008? Now, remember back in 2008 when we had that crash that happened, 2008, 2007, 2008. When we had the crash before, remember it was because of predatory lending, meaning that they were giving people homes, mortgages, I should say, that could not qualify for mortgages. So zero down, you didn't have to show your credit, you didn't have to show your income, you could just get a mortgage and get a house, right? All of that was going on. That's what caused our market to crash because people could not afford the houses that they were buying, right? And of course, the market was flooded with inventory. We had too much inventory. That is not the case anymore. Our inventory is still at an all-time low. Guys, even in this area, we barely have 3 months of inventory. And remember, in a balanced market, guys, we need at least 6 months of inventory. So believe it or not, though the interest rates are now creeping up and it's making it more of a buyer's market, we still, by the numbers, we're still technically in a seller's market because we don't have enough inventory. So my customers that are like, oh, I want this, that, and da-da-da. I just had a customer in town and we had a hard time finding them a house that will work for their particular criteria. And we ended up having to build a house because we just don't have that enormous still amount of inventory and things to select from depending on your price point and what exactly you're looking for. So inventory is also a factor. So do we see the market potentially crashing here now that interest rates are broaching closer to 7%? It does not show signs of that. What I'm seeing, guys, and what's happening now, because our market here went up almost 30% in some areas in Northeast Florida, right? From the time the pandemic started to now, interest rates, but prices went up on average around 30% in some areas. What I am seeing is that prices are now starting to soften by 3 to 5%. Some, that are desperate, maybe take, they're 10% lower than maybe the current medium home price. Yeah, but will the prices go back to what we saw pre-pandemic where you can get a house, a 4-bedroom, 3-bath house for $300,000? No. Foreclosure. I will say that most people that bought during the pandemic, they bought at 2 and 3%, right? And so they bought at 2 to 3%. The lending laws were a lot stricter, have been a lot more stringent than they were, say, back in 2007, 2008, where they're letting anybody get a mortgage. People that have bought a house at 2 and 3% were more than financially stable and capable of affording the mortgage that they had. And right now, and most of my customers right now, I remember seeing their mortgage payment. Most of them right now that have a 4-bedroom, 2-bath house, their mortgage payments is less than what most rents are for a 2-bedroom apartment here. So most of my customers right now, they have over $200,000 worth of equity in their house, and their payments are lower than rent costs here in this area. So do I foresee that a lot of people will be foreclosing on their house, especially since they have interest rates that are significantly lower than current rates, and they had to prove that they were financially secure to buy a house, and they have over $200,000 worth of equity in their house, before somebody forecloses, they could just sell their house for $100,000 less than the market. So I wouldn't bet on a lot of foreclosures in this area because people have too much equity to just, walk away from their house.
Now, many of you may be thinking, well, what about all this talk about a coming recession? Well, just remember, according to research done by CoreLogic as well as Keeping Current Matters, that recession does not always mean a housing market crisis. The last 6 recessions, house prices actually continued to appreciate and only fell twice out of the 6 of the recessions.
Here is not only that, our state income tax is significantly lower. I'm going to put up a video from Yahoo Financial where they talked about all the other markets are cooling, but the state of Florida is still hot because, of course, our year-round great weather. It's October and it still looks like this. And because you get no tax on your income. So we're in California right now. It is said that they're going to be passing a bill to raise their taxes to 14% of people's income, taxing people over 14%. My California buyers are still coming in the masses. I think I have 4 customers from California under contract currently, and that one just closed 2 days ago. And California is coming in masses here to Florida because they don't want to pay, when you think about paying 14% of their income to the government, as well as their extraordinary cost of living, with gas being almost $7 a gallon. 7% doesn't scare them because it's still more affordable than living in California. Okay, so that's just one thing to keep in mind. Out-of-town buyers is what is sustaining our market here in Northeast Florida. That's what most of my traffic is. I can speak on this matter. Now, you might say, well, I'm not an out-of-town buyer. I still think these interest rates are out of control. What can I do? Inventory. So right now, a lot of the builders, especially the bigger national builders that are traded on the New York Stock Exchange, they need to get rid of this inventory that they went ahead and built a whole bunch of. They have like 10 or 12 houses that are just sitting. They need to get rid of that. So before the year is out, this is the time to take advantage of it, because a lot of them have to close out their books strong by December to make sure their stock looks strong. So those inventory homes, they're actually helping you buy down your rate. Some of the bigger builders, I'm going to show you one of the plans that one of the builders sent to me. So they give you 3% the first year, 4% the next year, and then for the rest of the loan, it goes up to 5%, and it stays at 5%. So I don't want to say it's like a fixed ARM. So the thing about ARMs that scare me is the ones that are not fixed. Those are the ones that scare me. The ones that start and then one day it'll pop balloon and you don't know what it's going to balloon to. But this one is fixed. So they have stated that it's going to start at 3, go to 4. The max it'll go to is 5, and they have it locked at that 5 for the life of the loan. So those I feel a little more comfortable even mentioning. So those are great options. Work with the big national builders. So let's just say you're still trying to get to Florida. You don't have a whole lot of money. You're not coming from California and New York, and you don't have a whole lot of money, but maybe you got 400, 500,000, whatever. But you need to make sure it makes sense. I would work with one of the builders to take advantage of one of their inventory homes where they're offering the options to help you buy down your rate and pay your closing costs. That was the option I would go. I would stay well within our budget. I would make sure you have at least 6 months of savings, and I would make sure, even with these interest rates, that you make sure that you work with the loan officer that will lock your rate in now. They can guarantee you a lock for at least 90 days, and as well as a roll down.
So another great solution is Fannie Mae is estimating that mortgage rates next year will fall between 4.5%. So many are taking advantage of the desperation in the current market and planning to refinance next year once interest rates balance out. So this is a great solution.
Good deals are. So I hope that gives you a little insight on how to navigate and deal with interest rates. Definitely take advantage of those fixed, that people have the fixed ARMs, not the ones that fluctuate. The fixed ARMs, definitely take advantage of those. And please know I'm here to help and be your resource and be your guide and help walk you through this entire process. If you need any additional information, don't be afraid to reach out to me, and be sure to watch our next video on Northeast Florida housing market update, as well as a few other videos on this channel. Please know I'm here to help and to be your guide.
Thank you for staying tuned. And for those that still had questions about storms hitting the area here in Northeast Florida, please be sure to check out our latest video on hurricanes. Stay tuned.